Welcome to Coverage and Clarity with Jacques, the podcast where we break down protection, planning, and peace of mind so you can make confident decisions for the people who matter most.
Welcome to Coverage and Clarity with Jacques. This is where we slow things down, remove the confusion, and focus on what truly matters. Protecting the people you love and building a future you could step into with confidence. Now let me ask you something, and I want you to really sit with this for a moment. When you picture your retirement, what does it look like? Is it morning without an alarm clock? Time with your children, your grandchildren, travel, rest, peace? Or if we're honest, is there a quiet uncertainty beneath that picture? A question that doesn't always get spoken out loud. Will I truly be okay financially, emotionally, long term? Because retirement isn't just a destination, it's a transition. You're moving from earning income to depending on what you've built. You can shift that feeling of empowerment, but you also feel vulnerable. Because now every decision matters a little more. Every dollar has a job, every plan needs to hold. And today, I want to introduce, or maybe reintroduce, a piece of that plan that many people overlook. Not because it's not important, but because it's often misunderstood. We're talking about life insurance, not just as something you leave behind, but something that can support you, stabilize you, and strain your retirement while you're still here. This isn't about selling a policy. This is about helping you see the full picture so you can make decisions from a place of clarity, not pressure. Let's take a step back and redefine what retirement plan really means. Because for most people, the conversation starts here. How much do I have saved? And that's important because it matters. But here's where I gently challenge that thinking. Retirement planning is not just about how much money you accumulate. It's about how well you protect what you've accumulated. Let me give you an example. Imagine someone who spent 30, 40 years working, saving diligently, contributing to their 401k, building a nest egg. On paper, everything looks strong, but then life happens. A health issue arises. The market dips at the wrong time, or income source shifts unexpectedly. And suddenly, that carefully built plan starts to feel fragile. Not because it was wrong, but because it was incomplete. You see, there are two phases in every financial journey. Phase one is accumulation. This is where you're building, you're saving, investing, growing, working, contributing, sacrificing. Phase two is preservation and distribution. This is where retirement actually happens. Now the goal changes. It's no longer about maximizing growth. It's about maintaining lifestyle, managing risk, creating predictable income, preserving assets, reducing unnecessary exposure. The challenge? Many people continue thinking like accumulators long after they become retirees. And that's where the gap begins to appear. Life insurance could help bridge those gaps, not by replacing retirement savings, but by helping protect the retirement you've worked so hard to create. Because retirement success isn't just about retiring, it's about staying retired comfortably. Now, let's discuss some practical ways life insurance can support retirement planning. First, protecting a surviving spouse. This is one of the most important yet overlooked retirement concerns. Many couples build retirement plans around two people, two Social Security benefits, two pensions, two retirement accounts, two sources of support. Then life happens. One spouse passes away. Not only is the emotional loss, it's also a significant financial loss. Many surviving spouses discover that expenses don't decrease nearly as much as the income does. The mortgage may still exist. Property taxes still exist. Utilities still exist. Insurance premiums still exist. Groceries still exist. Life insurance creates a financial cushion during one's life during the most difficult transitions. It allows a surviving spouse to focus on healing rather than worry about how the bills will be paid next month. And that's a gift far greater than dollars alone. Immediate liquidity. One of the biggest challenges families face is timing. Bills don't wait. Expenses don't pause. But your assets, well, they could be tied up. Retirement accounts may have to be withdrawn with penalties. Investments may be down. Property takes time to sell. While life insurance provides immediate access to funds when it's needed the most. That liquidity can cover funeral expenses, outstanding debts, short-term living expenses, without sacrificing and making difficult decisions at the worst possible time. Your legacy and intentional wealth transfer. Let's talk about something deeper. Legacy isn't always about leaving large sums of money. Sometimes legacy is about removing burdens, making sure your family doesn't have to go into debt, sell the home, struggle financially during an emotional time. Life insurance allows you to make that decision in advance, to say, no matter what happens, I've taken care of this. And there's quite a power in that. Let's talk about risk. Not dramatic risk, not headline risk, the quiet risk, the one that slowly affect retirement plans every day. Well, here's the good news. People are living longer, and that's a beautiful thing. Retirement savings must last longer too. A retirement that once lasted 10 or 15 years may now need to last 25 or 30 years. That's a significant difference. The question becomes, can my money keep pace with my plan? This is why retirement planning isn't just about growth. It's about sustainability. Life insurance can help create additional layers of protection that support long-term financial continuity. Life insurance help offset that risk by providing supplemental resources, protection from a spouse, financial continuity. This is where many plans feel the most pressure. Healthcare expenses continue to be one of the largest concerns among retirees. Every health retiree faces includes rising medical costs, prescription medications, specialists, procedures, undergoing diagnosis. Healthcare inflation often rises faster than general inflation, and many retirees underestimate its impact. Healthcare is not just expensive, it's unpredictable. And long-term care, this may be one of the retirement's greatest financial threats that could significantly impact your savings. Needing assistance for daily living activities could alter retirement finances. Home care, assisted living, nursing care. Those costs can rapidly deplete savings. Some life insurance policies today include living benefit that allows access to funds in these situations. That can make the difference between maintaining independence or draining your assets. Many modern life insurance policies include living benefit riders that could provide access to funds during qualifying health events. These features can create flexibility during challenging circumstances. Now, retirees experience market downturns differently than young investors. When you're 30 years old, you have time. When you're retired, time becomes more valuable. A major downturn during retirement Withdrawals can create lasting consequences. Life insurance can provide a source of certainty within an otherwise uncertain financial environment. And certainty has value, especially during retirement. If your retirement is heavily tied to the market, then timing matters. A downturn early in retirement can have a lasting impact. Life insurance introduces an element of certainty into an otherwise uncertain environment. I remember speaking with a gentleman who told me, I did everything right. I saved, I invested, I worked hard, but I didn't realize retirement wasn't just about building wealth. It was about protecting it too. That stayed with me because planning isn't about predicting the future. It's about preparing for the possibilities. Let's shift this lens a little bit because this is where many people have an aha moment. Life insurance has evolved. Many modern policy has benefits while you're alive. Let's discuss what this means. Life insurance is no longer just something that activates when you pass away. It could be structured to provide value while you're still alive. Now, certain policies may provide access to a portion of the death benefit if qualifying health conditions occur. Now, these conditions include chronic illness, critical illness, or terminal illness. That means your policy can help support medical costs, home care, quality of life decisions. This can provide financial flexibility when it's most needed. Imagine facing a major health event and having access to resources that help preserve other retirement assets. That's meaningful difference. Some permanent policies have accumulated cash value that builds over time. This cash value can potentially provide supplemental retirement income, emergency access to funds, financial flexibility during market downturns, additional planning opportunities. Now, the key point here is not that life insurance replaces investments. It doesn't. Rather, it complements a broader retirement strategy. The strongest retirement plans often combine multiple tools, different tools serving different purposes, just like a house needs more than one support beam. Retirement confidence doesn't come from having one perfect solution. It comes from having options. Options create flexibility. Flexibility creates resistance. Resistance creates confidence. And confidence creates a peace of mind. Let's put everything into one practical example. Imagine a couple approaching retirement. They worked hard, raised a family, paid down debt, built retirement accounts, saved consistently. They're doing many things right, yet they still wonder, are we protected? Notice they aren't asking, do we have investments? They know that they already do. They're asking something deeper. We have accounted for life's uncertainties. Together, we build a coordinated strategy. Retirement assets provide growth and income. Life insurance protects the spouse. Living benefits provides flexibility. Final expense coverage helps remove burdens. Emergency reserves create liquidity. Now, what changes? The numbers may not change dramatically overnight, but their confidence does. Because retirement isn't about financial resources. It's about financial readiness. And readiness feels different. You sleep better. You worry less. You enjoy life more. That's the power of thoughtful planning. Now let's discuss some common mistakes. Waiting too long. The longer we wait, the fewer options we may have. Costs increase with age. Health changes. Eligibility can change. Planning early creates flexibility. Assuming the plan is finished. Many people retire and assume the planning process is complete. But retirement improves new risk. The strategy must evolve. Retirement isn't the finish line. It's a new chapter. Failing to coordinate assets. One account here, one policy there, a separate investment somewhere else. Sometimes people own valuable pieces but lack overall strategy. Coordination creates efficiency, and efficiency creates better outcomes. Now, ignoring inflation, $1 today won't buy what it bought 20 years ago or what it will buy 20 years from now. Retirees must account for rising costs throughout retirement. Protection strategies should consider long-term purchasing power. Now, as we close today's conversation, I want to leave you with this thought. Retirement isn't simply about reaching a certain age. It isn't simply about hitting a certain number. Retirement is about creating a lifestyle, a season of freedom, a season of dignity, a season of enjoying the life you spent decades building. And the best retirement plans don't just focus on growth. They focus on protection because what you've built deserves protection. The people you love deserves protection, and your future deserves protection. If life insurance can help support these goals, then it deserves a meaningful place in retirement conversation. Now, as you go on this week, consider these questions. Is your retirement protected or simply funded? Have you prepared for the unexpected? If something changed tomorrow, would your loved ones remain financially secure? Does your retirement plan include protection strategies or only accumulation strategies? Have you created flexibility for future healthcare needs? Now, those questions can lead to a powerful conversation, and sometimes one conversation can change an entire retirement. Your golden years should feel secure, not uncertain, and the right protection helps keep them golden. Now, remember, I provide coverage to clients nationwide. If you have any questions or would like to contact me, feel free to call or text the studio line at 631-594-8118. Once again, that's 631-594-8118. Thank you for joining me today. Now, this is Coverage and Clarity with Jacques, where we made the complex simple and help you move forward with confidence. Until next time, stay focused, stay prepared, stay intentional.